Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation this week with Vancouver portfolio manager Adrian Mastracci from KCMwealth.com. Adrian, you're a fee-only portfolio manager. Your company is structured that way, and I want to come back to why you've chosen that route. But I want to get back to these job numbers in the United States as we take a look back at the summer of 2010 and what perhaps lies ahead. As a result, as of the end of August at least, they're quoting an official unemployment number in the United States of 9.6%. But anybody will tell you that's barely adequate. In fact, it's probably well into the mid-teens. What does that tell you? Why are they reporting so low? Who's being fooled here?
Well, what they do is they look at those people who are actively looking for jobs, and they're the ones that are generally being counted. Now, if you're one of the ones that have given up, you're unemployed, you've lost your job, you may have lost it early on or later on, doesn't matter, but you've given up. You're no longer in the queue to be counted.
Right.
Therefore, you don't get counted in that stat.
You cease to become a statistic?
You cease to become a statistic.
My goodness.
So that 9.6% is probably somewhere closer to 16, 17, 18% if you tally up all of the ones that are not being counted but are still unemployed.
We can imagine how depressing that must be for a person who lost his or her job a year and a half or so ago, went through the employment insurance routine. That's expired, so now maybe they're dipping into the mutual funds, as you suggested a few minutes ago. But to not even be counted anymore, that's depressing stuff, isn't it? That's not exactly the kind of motivator gets you up anxious to get out looking for work every morning, is it?
Well, that's true. And in the earlier days, it used to take something like 12 weeks in the U.S. If you lost your job, it would take 12 or so weeks to find another one. Right now, the average is in excess of 34 weeks. So that has certainly gone up a fair bit. And they've got their equivalent of the unemployment insurance that we have here.
Right.
And that's been granted for about a year. So some of them are actually losing their benefits after about a year of being unemployed and not finding another job. And that's a difficult situation.
Absolutely. And here's the strange part about this whole equation. Businesses across North America, US and Canada, are said, Adrian, to be sitting on literally mountains of cash. They've streamlined their operations in the past couple of years. They've laid off and let workers go. They've passed on infrastructure and acquisition spending. They have a lot of money and are reluctant to commit that money to the marketplace. For what reasons? What do they tell you?
Well, I think the CEOs and managers of these businesses are saying, we don't know that we can actually make a return on our money. So they're still actually looking for expenses to cut, which usually means some of the people that they've hired have to go. They bring in more technology, anything to make them more productive so that they don't have to have as much expense. But certainly they do have a lot of dollars on the balance sheet, looking for a home, looking for something to do, but they have to look at it and say, we can get some sort of a return. And when you hear a lot of companies looking forward and not giving guidance that is worthwhile, then you've got to say to yourself, maybe it's best that I just keep it on the balance sheet, even though I know I'm getting a puny rate for Treasury bills.
Okay. Here in British Columbia, as is the case in Ontario as well, we've now endured the HST for a couple of months. Have you noticed any impact, not only in your personal life, but I'd be interested in that as well, but through your client base? Are people getting back to you going, well, my gosh, this HST, this is crazy, or it's great, or has it rippled through people you know in your contacts at all?
I think where it really ripples through is if you weren't paying the HST, the extra 7% before, and now you are, you certainly notice it, such as restaurants. So I've asked a number of restaurateurs that I've attended over the last month or so just what their situation was like, and they all say that they felt something. They don't know just exactly how much, but they have felt something a little less than what they had before.
Well, now, of course, when the polls come out, there are huge percentages of the population who absolutely hate this. But then if someone were to tap you on the shoulder and ask you, so do you like this tax? Who among us likes any kind of tax? So that's a given, but there's a lot of antipathy in this province towards not only the HST, Adrian, but I suspect the kind of sneaky way it was imposed. And that's a negative quality to it as well, isn't it?
Well, it is, and I think, you could have a discussion on that for months and months and never.
As we have had with the Premier and the Minister of Finance.
That's right. I've noticed that. So that's not going to go away, but that will certainly change the way we do some of the business around the province, and certainly also in Ontario.
What else can we talk about in terms of consumer confidence? What sort of indicators do you look for in the marketplace that could signify some kind of turnaround in confidence? What has to happen out there for people to feel better about spending their hard-earned after-tax dollars?
Well, you've got to have a few things. One of them is a job, and you've got to feel confident that you will have that job tomorrow, next month, 6 months from now. If you have that, then you as a consumer will feel a little better about spending some of that money that you're making, or maybe some of the money that's in the bond funds or the stock funds, whichever you happen to have. And I think you also have to have the real estate sector on your side. And in the U.S., none of those right now are firing on all cylinders.
Well, sure.
And that's the biggest difficulty that I see, just because you don't have those three things with you.
And north of the border, we're seeing price reductions, sales volume dropping, some degree, certainly nothing to the extent that's going on in the United States, but still some negative qualities to the Canadian real estate scene, especially here on the West Coast. Also, a knock against confidence, isn't it?
Well, it is. And for example, if you're working for a company that exports out of Canada, and as you know, the dollar is a little higher now than it was, let's say, 12 months, 18 months ago.
Sure.
So that sort of business is not going to be feeling quite as good because they're not making the sales that they used to because our dollar is higher. So that's one of the difficulties. One of the other areas that you also have to look at is, how much confidence do I have in my job that I will have that thing for 6 months, a year,
right.
2 years, because that really drives a lot of decisions. It drives how much of the things I'm going to buy, especially the big stuff, the durable goods. Am I going to buy a car? Am I going to get myself into payments for that? What about the fridge and the stove, the bigger ticket items?
Right.
Those are all sort of weighing on people's minds.
Need to take a break here, but you did mention bonds a moment ago, and I want to come back to that because bonds certainly has been front and center in financial discussions all summer long. We're looking back at the summer of 2010 with the capable assistance of portfolio manager Adrian Mastracci here on the Money and Wealth Show. Lots more to come.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.